Okay, let's start off guys, resuming with consolidation. Now we only have big sums left in this chapter. Whatever sums we are going to do from now till end of consolidation of subsidiary, all the sums from illustration 9 till the end are the same sums that is there in the old syllabus study mat and same in the new syllabus study mat. Only before this a few sums were added, but from now illustration 9 till the end everything is old syllabus, but for us we are going to learn from scratch. Even though it's new syllabus, you are studying for the first time. Most of you studying now are studying for the first time. Okay, we are going to learn from scratch. I am just giving comparison because if there is somebody who studied consolidation in the previous syllabus and now you are learning now, from now it is the same, nothing new with respect to subsidiary. Okay, let's do illustration 9. Each sum will take roughly half an hour. Okay. On 31st March 2021, P Limited acquired 1,05,000 shares in Q Limited for a consideration of 12 lakhs. So, what is my cost of investment? 12 lakhs. I purchase how many shares? 1,05,000. Percentage we have to compute. When we read the question, you will get the idea. Position of Q on that date. On which date? On the date of acquisition is given. PPE 10,50,000. Current asset 6,45,000. Equity shares is given. Pre-incorporation profit, profit loss, trade payable. Are you following guys? So this is on the date of acquisition. So pre-incorporation profit is fully pre. Even if they didn't give it pre, P&L fully. This is on which day? This is the balance on the date of acquisition. So whatever profit is there on the date of acquisition fully is pre. So this also is to confuse you only, he gave pre-incorporation profit P&L. On the date of acquisition, whatever profit was there, it was already there before you purchased. So it's pre-acquisition. Are you understanding guys? Next, give the following information for 31st March. This is the current year date of consolidation. Yes, online. Page number you find it, search and find. Next, P and Q, find the following information 31st March. Illustration 9 for you guys, question number 8. That's it. Okay. Find following information on 31st March. Equity share capital is given before bonus issue for holding and subsidiary is given. Then they have given securities premium is given. Pre-incorporation profits is given, which is nothing but this 30 is carried forward. Then you have general reserve, P&L, trade payables, relative items, investments. This is nothing but that same thing was there in the question above. Fine. This is the balance sheet. This balance sheet only I have to consolidate. This is the date of consolidation. P and Q only I have to do what guys? Consolidation. Rest everything else is going to be what? Working notes above all the extra information. Down. Directors of Q made a bonus issue on 31st March 2023. This is 31st March 2023. That means year end, last day of the year. They made a bonus issue in the ratio of 1 equity share of 10 for every 2 equity shares on that date. Of course, every sum will have 1 or 2 new adjustments from now. So that new adjustment alone you will add to your library, because this is the only sum we are going to do with bonus. And there is one more last sum, that's it. Okay. Bonus shares are issued out of post acquisition profits using general reserve. Very clearly he has given. Bonus shares is out of post acquisition. That means reserves and surplus to share capital using post. That means I don't have to reduce my cost of investment for that. Calculate as on 31st March. Cost of control and capital reserve, minority interest and consolidated, sorry, printing mistake, it is consolidated balance sheet, not printing mistake in the book. Study mat also has P&L. How I will prepare P&L? Where they give P&L? Consolidated balance sheet. This mistake, printing mistake was there in old syllabus study mat also. Carried forward to new syllabus study mat. If you look at the solution, they would have prepared only consolidated. Where is that? Balance sheet only will be there. No, you can't prepare consolidated P&L. How you will prepare? They would have prepared consolidated reserves Okay. So we will prepare consolidated balance sheet where your working note number 6, computation of reserves, will become that profit breakup. Are you following? So basically, forget the requirement. You are going to apply all the 7 steps because cost of control is one step, minority is another step. Are you following, guys? He is asking you to compute this before bonus, after bonus. That means 2 sums, guys. It's only one question. You have to do all the 7 steps 2 times. Are you following, guys? Once before bonus, once after bonus. First, let's do without bonus, as if this paragraph is not there. So remember, we're doing the sum twice, guys. So let's start off. First, work step 1. Start doing it with me, guys. Step 1. Date of acquisition, date of consolidation. Should I write this in exam? Yes. Date of acquisition is 31st March 2021. Date of consolidation is 31st March 2023. That means 2 years have gone by after acquiring the company. That is 1. Second, percentage. Come on, guys. Step 2. Percentage of holding, percentage of minority. I am doing in a rough way, guys. You write it neatly. Okay. You write down percentage of holding equal to so much. Computation, percentage of minority so much. Can you compute, guys? How much? 70%. Beautiful. How? Because they have 10 rupees shares before bonus 15 lakhs. That means divided by 10, 1 lakh 50. So subsidiaries total, Q's total share capital is 1,50,000 shares. In that I am getting how much? 1,05,000. So 1,05,000 divided by 1,50,000, you get 70. Are you following up? So minority will be, of course, 30%. Please show the breakup of how you took this 1,50,000 also, which is nothing but 15 lakhs divided by 10. Is it given in the question? Where? Perfect. They have given it. Then don't need the breakup, guys. They have given it. But again, I will not take this value. I should take only on consolidation date or acquisition. Leave. It's given. Let's not confuse. 70%. If it's not given, also you know how to find out. Step 3 is what? Analysis of profits. Or in other words, the right term is analysis of reserves and surplus. This is what he means in the question by preparing consolidated P&L, but that is not the right consolidated P&L. Leave it. Come back here. Analysis of reserves and surplus. What are the reserves available in the balance sheet on the date of consolidation and acquisition? Which reserve should I analyze? Should I analyze these 3 reserves or should I analyze these 2 reserves? Down. Always I am going to analyze the closing balance of reserves on the date of consolidation. Whose column? P or Q? Q. What's the point of analyzing holding company reserves? It's fully mine. I need to analyze only subsidiaries. So let's go one by one, guys. There are 3 reserves. For each reserve, I will prepare one chart. So I am preparing chart. Book has table. Sir, which one to do? Can I do chart? Absolutely yes. In my, I didn't have consolidation enter. In the final, I wrote prepared chart. Working notes can be in any manner. Only that final step should be in proper way. So first I will write pre-incorporation profits. I will write A, first profits. How much, guys? Rupees 30,000. This is what? Fully pre-incorporation. Fully pre. Because the word itself says pre-incorporation, before the company is incorporated, not before consolidation. Okay. Fully pre. Come down. B. Next, what we will take? General reserve or P&L? Your wish. Which one you want to take? We will go in same order. Next is general reserve. General reserve. How much is there, guys? 19 lakh. 19 lakh 5,000. Where it's there? It's there in the question here. 19 lakh 5. Pre or post or split or? Why post? Because on the date of acquisition, general reserve is not there. That means whatever you earned after this, fully post. That's it. Are you following, guys? So this 19 lakh 5 will be fully post. Are you following, guys? Easy, huh? See, this is the key step, guys. 3 and 3a. If you get it right in every sum, that's it. It's over. This sum, it's easy. Next sum only, it will keep getting complicated. Profit and loss account. How much is given, guys? 4 lakh 20. But this 4 lakh 20, I will split as pre and post. How much is pre? Given in the question, in the acquisition table, above P&L was 60. That means 60 will be pre, balance 3 lakh 60 is post. Are you following, guys? Is there any other reserve in the question? Is there any other reserve, guys? No, no reserve is there. Hold on. These are the 3 reserves. Is there any other problem in question, guys? Okay, values we took is not correct, huh? Alignment 30. These 3 are correct. What we have done so far, no change, no. Okay, then what is change? Securities premium is how much?
Actually, empty. Pre-corporation profit for P is 9 lakh. Just 1 line.
In the book that you have, this is correct. This is correct. So make the change. If somebody has book alignment issue, please make the change, guys. Sometimes here, sometimes there. That and all you make the change. Okay. Typist only I have to call him. Okay. Already he has lot of work. Fine. These small things happen, guys. It's okay. Leave it. Just make the changes, alignment issue, those who have the book. But this ICA question, so you use ICA. I told you, new syllabus, ICA sums, you be confident. Okay. Fine. Are we done, guys, with this? Hello. So now I will prepare that magic table 3A. Guys, 3A is what we are doing. In exam, based on the flow, you change it. Don't write magic table and all in book. Vignesh, don't write magic table. Okay. Computation of total pre and post, particulars, total, holding share, who's holding here, P share, minority interest. 3 things will come, guys. 3 things. One is share capital, one is total pre, one is total post. I think you can do it, guys. Don't wait for me to do. From above working, take all the values. Take all the values. Share capital take from the question. Share capital is 15 lakhs. So from this 15 lakhs, 70%, 30%. 70 is how much, guys? 10 lakh 50,000. So 4 lakh 50. Total pre. How to find total pre? You are above step 3. 30,000 plus 60,000. Are you following up? That addition you have to do, because from step 3, how you found total pre, guys? Pre incorporation 30,000. General reserve fully post, so nothing. P&L you took 60. So 60 plus 30. Total pre will be 90,000. Similarly, total post is how much, guys? 19 lakh 5,000 plus 3 lakh 60. How much? 22 lakh 65. Do the multiplication, guys. Do the multiplication. 60,000 into 75. 70 is how much, guys? 19 to 63,000. 27,000. What about the last one? 15 lakh 85. 6 lakh 79. 500. All of you got this up. Are you understanding logic of every number here? Everybody getting the logic? That's why I spent so much time. Clear? Kalyan getting the logic of? Sure. Everybody do this, guys. Now, an imaginary line just for our working. These two will go where? Step 5, cost of control. This total is step 4, minority interest. This will go to step 6, holding share of subsidiaries post acquisition profits. Correct? This table is not needed, but we are making it easy to make the next 3 steps save time. Are you following, guys? See again, sir, all sums same only, sir. The main core adjustments will come in this part, in this chart split. Wait for the subsequent sums to come. That's where the real consolidation is going to start. Okay. So, everybody got this? Now you know what to do, guys. Step number 4, minority interest. Already computed. How much, guys? 4,50,000. Yeah. Add all these 3. How much? 11,40,000. 11,56,500. Step 5, cost of control. How much you paid? Question itself gave it. Acquired at 12 lakhs. We don't have any dividend in this question. So, I will take 12 lakhs cost of investment minus what I got. This one, step 5. 10,50,000 plus 63. How much? 11,13,000. You get a goodwill of 87,000 worth of goodwill. Are you guys following? Hello? Guys, understanding? See how quick I am finishing the next few steps. What is step 6, sir? Step 6 will be first holding company's profit. How much, guys? Holding company's total. Okay, I'll do step 6 separately. Let me do step 6 separately. How? 11,13,000. 11,13,000 represents value of net assets taken over, which is nothing but share capital plus pre-reserves into my percentage of 70% of that. Only in the previous step we computed both together. That's why that table 3A. Understood magic now, Radharam? Yes, okay. Yes, Vignesh. This 11,13,000, no? If you want to do equation, very simple. Share capital plus reserves and surplus into 30%. If you want to do equation wise, share capital plus reserves. Hold on, what is share capital? 15 lakhs plus 30,000 plus 19 lakh 5 plus 4 lakh 20. How much you are getting if I add everything? Just for computation purpose. 15 lakhs plus 30 plus 19. Basically, I am adding all the shareholders' funds. How much you are getting, guys? 38 lakh 55,000 into 30% is how much? 11 lakh 56,500. Are you following, guys? So, book how they would have done. They would have taken total share capital and reserves into 30%. This I have already showed you in previous sum. Are you understanding, guys? Clear? Fine. Step 5 is done. Similarly, step 5 also. This 11,13,000, how to do breakup? Share capital plus pre-acquisition profits into 70%. Are you following, guys? Now come to step 6, which is my important step, finding out reserves for the purpose of balance sheet. Reserves and surplus for the purpose of consolidated financial statements. The first thing you have to write here is the reserves of holding company. Copy paste, how many ever reserves we have? We have securities premium, general reserve, P&L, correct? These 3, 9 lakhs, 60 lakhs, 15 lakh, 75. So first you write the reserves of holding company fully. Don't total and write. Show the breakup. Don't write 9 lakhs plus. Show the breakup. Securities premium 9 lakhs. General reserve 60 lakhs. Profit and loss 15 lakh 75,000. Please show the breakup. How much are you getting, guys? Securities premium plus P&L plus I am writing in total just to save time. You write separate line item. 75,000. Are you following, guys? Add. Now you will add post acquisition profits of subsidiary which belongs to me, which in this table is how much, guys? 15 lakh 85 500. My share of subsidiaries post acquisition profits. My share. So the wordings will be, if you want to write the full wordings, it will be holding company's share of post acquisition profits. Are you following, guys? How much? 15 lakh 85 500. Total 1 crore. Are you following, guys? This will come back. This 1 crore in balance sheet, reserves and surplus. Are you following, guys? So basically this is like your schedule for reserve and surplus. So basically step 6, when you prepare consolidated balance sheet, you don't have to prepare again schedule for reserves. This only is the schedule. Are you getting it, guys? Don't do double work. Understanding, everybody? Now you have to prepare what? Consolidated balance sheet. Now follow very carefully. In the main exam, you have to prepare balance sheet first, then only steps. Are you following? For every chapter, amalgamation, consolidation, schedule 3. First you have to prepare balance sheet, then only working notes. Sir, how, sir? How long balance sheet will take? Schedule 3 format is one only. So write the format, then you do all the working notes. That comes out of practice. Sir, what happens if I write steps first and write the answer later? See, the point is, the person correcting your answer sheet has a key. In the key, there is the balance sheet first, followed by steps. All companies in reality also, they present to the shareholders balance sheet P&L first, then only notes and working notes. Correct? So, do you want to irritate the examiner or make the work easy for him? Make the work easy. So, in the key, he will see balance sheet. For you, he has to search, hey, where is the answer? He has to turn pages. Make the work easy for the examiner, guys. Remember, I want you to, when you write the answer, imagine if you are the examiner correcting your own paper. Make the work easy. Make the work easy. He should easily be able to find the answer. He will see, oh, this only answer. Balance sheet, minority tallying, reserves tallying. Oh, steps is here. Fine, full marks. If you give steps to first, then he has to turn pages to find that balance sheet. Don't irritate the examiner. Already he is getting irritated by correcting 50 papers a day, or 40 papers or 30 papers, whatever. So somebody else already irritated him. You don't increase it. Or if first 2 pages of my answer sheet, I strike, sir. That's it, gone. See you in the next attempt. Okay. I'm not saying you, if it strike means, no, don't panic in the exam. Don't tell, I'll give the answer copy and I want new booklet. No. Leave it. It's done. Don't try to tear that page. Don't do all of that. It happened means happen. Leave it. Proceed to the next answer. That's it. That's why the first answer that you pick in every subject is very important. Pick, at least there will be 2 questions of which you know fully correctly. Guys, out of 120 marks with choice, at least 10 to 20 marks you will know confidently. Hey, this answer I know without a doubt. Start with those in all subjects. Okay. Now, come back. We have to prepare balance sheet. Shall we prepare the balance sheet, guys? Okay. It is in schedule 3 only. So, T format just to save time, but let's do it in schedule 3 itself. First, let me do it in the question itself so that I will save some time, guys. Let's do in question. Consolidated balance sheet I am doing. You will help me with the values. Okay. One by one. I am going to add the values over here. In this space I am going to write. Okay. What is the value of share capital for consolidated balance sheet? 60 lakhs. What I'll write, guys? 45 lakhs. How many of you thought of adding? No. Only holding company. Next, all the reserves put together. What I will take? Step 6. How much? Where is it? This mouse. This one, 1 crore 60 lakh. So 1 crore 60,500. I'm preparing for you to show you how easy it is. Next, trade payables, line by line addition. Will anything else come? Minority who will write? Minority interest will come up. That's another common thing that we forget and we search IO balance sheet didn't tally. So minority, go to your working notes. You already computed. How much, guys? 11 lakh 56 500. 11 lakh 56 500. Nothing else in liability side. Asset side. Oh, trade payables. Sorry. Trade payables 5 lakh 55 plus 2 lakh 10. How much, guys? 7 lakh 65. This is my liabilities. Assets, no adjustment. What you are going to do? Line by line addition. 79 lakh 20 plus 23 lakh 10. How much, guys? How much are you getting? 1 crore? 1 crore? 2 lakh 30,000. Correct? 1 crore 2 lakh 30. Investments, what I'll write? Investments, 12 lakh will it come out? That only we are striking off and replacing with goodwill. How much goodwill? Go up, guys. Here goodwill we computed as 87,000. So goodwill will be 87,000. Current assets, just line by line addition. 44 lakh 10 plus 17 lakh 55. How much? 60? 65,000. This is my asset side. Are you following? Kalyan, getting it up? So now can I say consolidation is nothing but line by line addition subject to computation of cost of control and computation of minority interest. Everything else is addition. Correct? Can you tell me, is it tallying? Is it tallying? It should tally. That's it. See, you will prepare this in schedule 3 format, guys. Don't write like this in an answer sheet. I'm just trying to save some time for us. You will prepare in schedule 3 format. Some will practice that. Clear? Everybody getting it, guys? Easy. This answer is not there in the book because they have not prepared consolidated balance sheet. That's why I'm giving it to you. It's very simple. Consolidation easy or difficult, guys? Hello? Now we have to do the same sum again. Repeat with bonus. Repeat the sum with bonus. All the steps. You can skip step number 1 and 2 or I should do that again. I have to do everything again. Okay. Any doubts in this, guys? Fine. Minority interest? Yes. Follow. Actually, immediately after bonus is only a 2 minutes extra work. If you learn the concept, it's only 2 minutes extra. But since you are doing first time, let's do the whole thing again. Now follow, guys. Trade payables doubt, yes. Trade payables 5 lakh 55 plus 2 lakh 10, 7 lakh 65. Is it tallying or not tallying? Difference, difference in this difference, is there a difference? Yes, Padma, what difference? You added what is there here only, no? I hope my numbers are clear enough to understand. 1 crore 2 lakh 30,000, that is 30,000, yeah, 30,000. My bad, my mistake only. I think you have to change specs again. Okay. Clear, guys? Can we proceed to after bonus? Hello, guys, come on. Immediately after bonus issue, guys, come on, fast, guys. Immediately after bonus issue, let's do the same set of steps. First, let's understand how many bonus is given. They have given one fully paid up bonus share for every 2 held on that day. So I have to compute into 1 by 2 for whose share capital? Subsidiary or holding up? Who gave bonus? Subsidiary. Q gave the bonus. Look at this. Directors of Q. So existing shares are 1 lakh 50,000. So 1 lakh 50,000 into 1 by 2, 75,000 shares of bonus into 10, 7 lakh 50,000 is the bonus. What is the entry for bonus, guys? They told it's given out of reserves post acquisition, correct? If you remember reading earlier, bonus was made out of post acquisition profits using general reserve. That means you can't even debit anything else. General reserve account debit 7 lakh 50 to equity share capital 7 lakh 50. So the new share capital of subsidiary will now become 22 lakh 50,000. How, sir? Existing was 15 lakhs plus 7 lakh 50. This is going to be the only change that we have. Are you following, guys? Bonus, are you understanding? Now we have to repeat all the 6 steps again. 22 lakh 50. Are you understanding, guys? Anybody has doubt in bonus computation? Hello? How into 1 by 2? 1 lakh 50 into 1 by 2. We got 75,000 into 10. Yes. Q Limited's share capital after bonus share capital. Before bonus plus bonus after bonus. Yes. Okay. Sometimes I also get tested, correct or wrong, in terms of computation. Tested means testing if I am done it correctly or wrong. That's it. Hey, what is this not going? Fine, leave it. So we will start with step 1. What is step 1? Date of acquisition, date of consolidation. Will that change, guys? No, same as previous. So you write freshly again, but for us same as previous. What are the dates given, guys? I'll go back here, same thing. This will remain as the same, correct, of step 1. What about step 2? Percentage. Change or same of? Percentage will remain same or no? Holding in subsidiary. Fine. Now what is the new share capital of subsidiary? 22 lakh 50. I have.
50 lakhs.
I don't have 1 lakh 5. I had a 1 lakh 5. I also have gotten bonus of. So into 1 by 2 is how much? 52 500. So add both, you will get 1 lakh 57 500. Same percentage, 70%. Are you following up? I'll explain again. Look at this, guys. Before bonus, 1 lakh 5,000 shares out of 1 lakh 50. Correct? After bonus, the new share capital became 2 lakh 25,000 plus bonus. So for me also plus. After adding it will become 1 lakh 50 57 500. Here they added bonus of 75,000. For me I will add 50 to 500. Are you following, guys? Prishmita, getting it? So whether it's before bonus or after bonus, percentage cannot change because everybody is getting bonus equally. It's not discriminatory bonus. Only minority gets bonus, holding doesn't get, or holding gets. Everybody gets 1:2. So my share will still be 70:30. 70 for holding, 30 for minority interest. Are you getting it, guys? Hello? Getting the logic? It's very, very basic logic, guys. Maths. Everybody got the bonus, but I will still compute and show. Now I control 1,57,500 shares out of 2,25,000. Only number of shares have increased proportionately for all. Step 2 is done. Now we have to go to step number 3, correct? Step 3, which is my key step, analysis of reserves and surplus, correct? This is clear, guys. So should I write it again? Yes, because now we are doing consolidation after bonus issue. So after bonus issue also, sir, answer is 70:30, but how you derive it differs. That you need to show the examiner, hey, I found out it's same percentage. Clear? Hold on, let me finish analysis of reserve and surplus. 3 reserves. First is pre-incorporation profits. How much is given, guys? 30,000. What is this? Fully pre, no change. This is going to be fully pre, no change. Correct, guys? Next is general reserve will go for a change. How much is general reserve they are given? 19 lakh. Fully post only, but there is a reduction. General reserve has declined because of bonus. What's the decline, guys? 7 lakh 50,000. Sir, how, sir? This entry. Sometime back we passed this entry, correct? So 7 lakh 50 reduced. So balance general reserve now is 11 lakh 55,000. This will be fully post, and C is what, guys? P&L, how much? 4 lakh 20, same as before, fully post. Oh, sorry, it's given, yeah, same as before, no change. So it will be 60,000, same as before, guys. 3 lakh 60 post. That means in exam, will you do it twice? No. I am doing it twice in class for you to understand when a change happens, start learning where the impact happens. You won't have the time. So in exam, you will only focus on this one working note change. You don't waste time by doing this pre, again pre, and this again splitting it. It's the same. You give a note. Are you following, guys? Understanding? So you will save time. That means in exam, I will just prepare the step 3A. Step 3A only will change because of that bonus. Let me prepare that. Particulars, total, holding, minority, share capital, total pre, total post. Now what's the share capital, guys? 22 lakh 50,000. You have to be little careful here because there is a change in share capital from date of acquisition to date of consolidation. So in working note, I will discuss it when we get there. Total pre is, total pre how much, guys? Add 60 plus 30. Pre is not going to change. Do you understand, guys? Because we have not used pre profits. 90,000. Post will change, of course. So post will be 11 lakh 55 plus 3 lakh 60. How much?
15 lakh 50,000.
11 lakh 55 plus 3 lakh 60. 15 lakh 15,000. No? Are you following, guys? Now you compute, guys. 70 30. Do the maths. This I can do 63 27, but the rest will change. Rest will change. Total post will be, just compute, tell me the values. Share capital how much, guys? 15 lakh. Minority 6 lakh 75,000. Similarly, total post
10 lakh 50,000.
10 lakh 60,000. 54. Here only we have a catch. Okay, small change. Yes. Okay. Anybody who has to leave can feel free to leave if they're getting delayed. Okay. Yes. If you have important calls, you want to drink water, use restroom, go out. Comfortably get up, go out. You don't have to inform me. I will not take it in any wrong way. You can update, leave, come back. Okay. Come back if you want to come back. Okay. No. This total is what, guys? Minority interest. This will go to my step 6. Step 6. I'm just doing it different. And this is your working note or step 5, cost of control, but there is a small catch over here which I will discuss when we get there, because this 15 lakh 75 is including of bonus which I got using post. So can I consider that in the cost of control is something we have to discuss when we get there. Okay, following, guys. So now let's check the answers so far. Minority total is how much, guys? Minority total is 11 lakh. Same as before bonus. Why, sir? Wow, sir, all this you did. Same answer. Why? With respect to minority, they don't care about pre and post. All that happened is reclassification. Do you see it? Before table, if you see, before table, yeah, if you see, reserves were more, share capital was less. In this table, what happened? Reserves decreased, share capital. Anyway, it's like instead of writing 100 share capital and 50 reserves, now I'm writing 130 and 20. My minority is basically this total into 30% of whatever ratio, correct? That means I don't have to do minority working note before after. It's going to be the same. To conclude that point, I wanted you to do it. Getting the logic of, are you following, guys? Let's go check if minority is 11 lakh 56 in our answer. 70-30 is what you guys got. Okay. Yes. So minority 11 lakh 56 500. This is before issue of bonus. And before issue of bonus, did we get goodwill 87,000? Yes. I'm just checking the answer. Then reserves profit. This is revenue reserve. Leave that. After bonus issue. Okay. 11 lakh 56 500. Are you following, guys? Understanding of? So we got this. So in book they are showing both. You will also show both, but you will not waste time in doing the whole thing again. Show only relevant steps. Clear, guys? Now we have to go for goodwill computation. Correct? Cost of control. In cost of control, we will consider what you paid versus what you got. What I paid, cost of investment minus net assets on the date of acquisition, which we don't have. That's why we're using share capital plus reserves. How much are getting cost of investment, guys? 12 lakhs. No dividend in this question. Minus, can I take this value as all sums? That's what we're doing in all sums. Pre, no problem, guys. 63 remains the same. Share capital only is changing. Earlier share capital was 10 lakh 50 on the date of acquisition. Now share capital has become 15 lakh 75,000. And this is after I acquired. Correct? It's after I acquired. So if I don't take that, what happens? If you don't take it, let me take the same 10 lakh 50, because that only is the share capital on the date of acquisition, plus 63,000, which is pre. That means I am not considering the bonus effect to show you what will happen. That's not the answer. Okay. Now how much you are getting answer? Same, of course, same 87,000 goodwill. That means bonus will not impact what is there before and after. But follow, guys. If you take it like this, what will happen? When you add in reserves later, you are adding only 10 lakh 60,500. Correct? See, after this, if I prepare the balance sheet, keeping this as base, with this, we can prepare balance sheet. When I prepare the balance sheet, when I go back to this balance sheet after bonus, what will happen? Which one? Yeah. This reserves considers only post acquisition reserves. This one, it takes only this 10 lakh 6500. Earlier we used to take 15 lakh 85,000. That means the balance sheet at this stage will not tally. Are you getting the logic, guys? It will not tally. That means that bonus received by holding, where should I show it? I should show it somewhere. So in the balance sheet, share capital of consolidated balance sheet, financial statements, will be only H only. So bonus will not come here. Reserves and surplus is after reducing bonus. That means that bonus element where I will show. The bonus which holding received I am not able to show, correct? So for that reason the standard tells instead of taking 10 lakh 50, take whatever is there in step 3A only. So step 3A is magic step, it will always work. Take only 15 lakh 75,000. So if I take instead of 10 lakh 50, 15 lakh 75,000, you will not get a goodwill. What you will get? Capital reserve of how much? 4 lakh 38,000. Sir, what is the meaning of this? The meaning is, I told you in the start of the class, I told you it's final syllabus, but I told you we have hints over here. The goodwill once computed will never change unless there is a change in number of shares. I told you. So when you acquire the shares was 1 lakh 5, after bonus it increased. I told you it's final syllabus, correct? Here percentage remains the same. If percentage changes, again huge computation. But here percentage remains the same, but number of shares are changing. So when I acquired, my goodwill was 87,000. But because the number of shares are changing, now I'm getting a benefit. It has become a capital reserve of 4 lakh 38. It changes if shares changes. Are you following, guys? No. In other words, when I purchased, I paid 87,000 more. But later I got rewarded by getting more shares. That is a change in number of shares. So my cost of control also changes. Are you following, guys? The cost of control I paid more, but later for the same price I paid, I got a bonus. So capital reserve 4 lakh 38. Are you getting the logic, guys? I told you this cost of control will remain the same forever unless there is a change in the number of shares or change in percentage. This is one such sum. That means bonus changes means this will change. So my capital reserve will now be 4 lakh 38,000. Sir, even if you don't understand logic, you apply steps and keep going. Step 3A. As usual, how you will do? As usual, what do you do? From step 3A, I take these both up. That same 3 I take without your knowledge, without understanding concept, you will get 4 lakh 38 capital reserve. Enough for exam. That is what will be the answer here. Go here. 4 lakh 38,000. But those who know the logic only will ask me, sir, you only told we have to take value on the date. But that is the value on date if there is no change in shareholding pattern. Here the number of shares is changing. So you have to recompute goodwill capital reserve. Otherwise, goodwill capital reserve will remain the same. Because I am recomputing for a change, this value is changing. Are you following, guys? Clear? So there are two types of change, guys. One change can change the percentage of 70 up or down. The other change like bonus, 70 remains the same, but only number of shares changes. In both the cases, cost of control will change. This is CA inter-syllabus, bonus. If the percentage changes to 75, 68, we will learn in CA final. Are you getting the difference, guys? Lot of concept. I don't know how many of you are getting the concept, but even if you don't get the concept, I gave you steps. Close your eyes and follow those steps. You will get the consolidated balance sheet. Following, guys. Now we will go prepare the balance sheet again. Yes.
Sir, the new pattern. Yes, the new pattern. Isn't it like declared dividends? More, can we take it as
See, his question is, sir, can I take it as declared dividend? If it is like declared dividend, anyway, if it's we reduce some cost, no. Here I can't reduce some cost of investment. Okay, his question is, okay. So Dhyaneshwar is having a very valid question. Dhyaneshwar is saying, sir, dividend means you are reducing from cost of investment. No, sir. Why not bonus you are reducing? Very simple. Dividend is realized gain. I got the money. I paid 12 lakhs. I got back 1 lakh in cash. In bonus, I paid 12. Still what I paid is 12. My cash outflow is still 12. Did you get something back in cash? No. Bonus is non-cash benefit. So we will take it. So the benefit also goes to capital reserve, non-cash benefit. Don't reduce cost of investment. Getting the logic? First of all, to understand this question, why I am reducing one? Because gain realized and unrealized. Are you following, guys? Okay. Now I will prepare the consolidated balance sheet. Have you all written till here, guys? Capital reserve 4,38,000. Everybody wrote till there, guys. Now let's prepare together, guys. Let's prepare together. Carefully tell me, I am preparing balance sheet after consolidation. Somebody is writing this. What you will write? 1 second. Sorry, debt equity. Steps. Oh, step 6. Correct. You are right. My bad only. Step 6 I forgot. Very good. Step 6 is reserves and surplus for the purpose of consolidated. Very good. Valid point only. First time. No. Always it's valid point, guys. See, you have a doubt. You ask the doubt. I don't care what the doubt is. I'm going to answer it. It's only about when I answer. Sometimes between the class, sometimes end of the class. So feel free to ask all the doubts. Okay. You should not care what others tell, guys. You have a doubt. Kalyan is having a doubt. Kalyan will ask. Don't care about others, because in exam, if you get a doubt, who will help? If you keep thinking about others, just ask the doubt. That's it. Some of you are asking me. Some of you are asking Dhaneshwar. That is only the difference. That's it. Feedback I got is, sir, this batch, all students are asking all doubts to Dhaneshwar. Dhaneshwar complains saying he didn't have time to study. He complained really. I'm telling now, so that you don't ask him doubts, you ask us. Okay. Recording students, ignore, guys. Fine. Okay, now, yeah, steps. First we'll add all the reserves. Reserves of holding limited, correct? All reserves of holding. Securities premium 9 lakh plus general reserve 60 plus P&L 1575. How much are getting, guys? Same value, that like that. 84 lakh 75,000. Please don't write total like this, guys. Separate. Premium, this, that, separate. Second, I will add post acquisition of subsidiary limited, my share. This also is there in the magic table. Which one? 10 lakh 60,500. So I will write here 10 lakh 60,500. Total is 35,500. This will be your step 6. Step 6, guys. See, sometimes they will tell minor. Okay, this is step 6. Will this always be step 6, sir? No. What if I purchased 100% of subsidiary? Minority will not be there. Then this will become step 5. Careful, guys. Don't think, ayo, sir told minority is step 4. Minority is not there. If everything is there, this is the flow. Okay. Step 6, reserves 95 lakh 35,500. Clear? Everybody getting this? Now we will go back here and we will prepare the consolidated balance sheet. Schedule 3 means strictly schedule 3. Now just to save time, I am filling it over here, guys. Share capital, how much? How much, guys? 40. Bonus. Bonus, how many of you? Plus bonus, 45 plus bonus. Yes, Kalyan has raised the hand. Come on, guys, Kalyan. Then 3, 4, 5, 3 much. That full group has raised hand. Vishnu is thinking. Others, recording, put your hand up. 45 lakhs, 45 lakhs plus bonus. Come on, guys. Yes, the Kalyan group, please GPay the money to me. Share capital, no, follow, guys. Share capital will always be holding only. Who gave bonus? Subsidiary. That's why we are anyway adjusting that later. See, holding is not increasing holding share capital. Subsidiary share only is increasing. Only subsidiary from 15 became 22 lakh 50. Are you following up? So this will remain at 40. Remember, guys, I am telling again and again. Examiner releases something called examiner comments. Okay. Saying for every chapter, what are the common mistakes students do? In the last 20 attempts, the top 2 mistakes in consolidation, which remains top 2, record not broken. First mistake in while preparing consolidated balance sheet, common mistake means all those who couldn't clear made those mistakes. They used to add holding and subsidiary and search why it's not tallying. In consolidation, share capital is only holding. Logic is that's the money I have. If you don't understand, just mug up that. Second mistake what they do is, they will do all the steps. Balance sheet will not tally because they forgot to write minority. Because in this question, minority will not be there. That's the other second common mistake. So add, so first the 45 lakhs. Reserves how much, guys? 95 lakh, 35,500. 95 lakh, 35,500. Is this, okay, we have done this. Is this correct? Is this correct? Okay, we leave it, 95 lakh, 35,500, leave it. Next, the minority is how much, guys? 11 lakh, 56,500. Trade payables, 7 lakh, 65. Liability is done now. Hold on. Assets total. Assets remains the same, just like previous. PPE total, 10 lakh. All the eraser is not working today. 1 crore, 2 lakh, 30,000. Investments replaced. Will goodwill come? Now only it should strike you. Capital reserve will come. You forgot to add in liability side. This is reserves. Here itself, if you add capital reserve, headache gone. So this is like reserve. So here is I will add capital reserve. How much, guys? 4 lakh, 38,000. Another common mistake, guys. When goodwill comes, you will add it. But when capital reserve comes, we tend to forget. Not because you don't know. In that flow, in the scheme of things, we end up missing it. Current asset addition, guys. 61 lakh. 60. No, Padmanabhan will not understand this. 6 lakh 65. Wait, 6 lakh 65. Now check the total, guys. This is this. Check. That is 61 lakh 65,000. Recording students, for me to erase that eraser is not working properly. Now it's working. Okay. 61 lakh 65. Following, guys, everybody tallied up. Understood? That means before bonus or after bonus, asset side of balance sheet need change. Now you know bonus is just change of composition from reserves becomes share capital. If you see here, liability and minority also remains the same. Only that within reserves there is a change. Are you following up? Are you understanding, guys? So when in exam, if they ask you to do with before and after bonus, all you have to bother is on the reserves working part. Don't waste time doing minority. Don't waste time doing everything else. Are you understanding? We took 1 hour for this sum because we did the sum 2 times. But actually 30 minutes I can finish both. Clear? Vignesh, following easy? Understanding? Is everybody getting the logic? Any doubts in this sum here? Any doubts online? Beautiful question. Yes, your name. Durai is asking a question. Sir, you are telling holding means always 45. Shall I memorize like that? No. In some questions, instead of bonus by Q, bonus will be given by P. Holding company giving bonus. Holding company making rights issue. Holding company doing buyback. Then you have to make the change. Remember, consolidated balance sheet, share capital is the share capital of what would have been holding. So Durai brought it up. Clarification, I am sure even if we didn't discuss, you would have taken it, but holding company makes change, now we will make the change. So Durai is asking, sir, what if subsidiary is doing buyback and rights and bonus? Holding also is doing bonus and rights, what to do? CA final. We have it, CA final. Okay. Next, again Durai is asking, sir, what if I do buyback 4 times in the year and bonus 4 times in the year? Not in CA final. Companies Act doesn't allow. After you do one buyback, you have to wait for 1 year. After you do a bonus, there are some time restrictions. Leave bonus, but buyback there is 1 year. So you have to follow Companies Act. We can't do it. Okay. So I think we are done with the first 11 sums. All done. This also 12 also is done. 12 means for you 11. Okay. Fine. After this, all the sums are big sums, but I will take a small concept now. Okay. Recording students, with this session is over. Thank you guys. See you all in the next session.